Alright, what's up guys? The long weekend is over. Tuesday, September 6th, and we are back to the grind. So we'll do a little bit of pre-market prep here and set the tone for the unfortunately short week ahead. So I'm going to post the weekly watch list here in the Mastery in a couple of minutes. So, reminder guys, come on over, check out the Mastery. I'll be live in there on Thursday and Friday. And remember, if you sign up for the Mastery, you also get access to the free room over at Simpler. And I'll be live in there for an hour today. So we got the $7 30-day trial going. So I'll put the link in the description. But it looks like JC's got a webinar on Wednesday. Oh yeah, that's right. JC's son is getting into trading. So my job might be at risk. But we'll jump in, guys. So I'm not going to talk too much about the market. Did a pretty good job of covering that in the weekend watch list video, which I put 2008 in the title of the weekend watch list video. So the algorithm must have liked that. Got some good views on that. But for the market, guys, just remember the biggest thing I'm seeing. I think we all got a pretty good grasp on the overall game plan. Short the crap out of the bounces until proven wrong. But just remember, the biggest thing I'm seeing is over here on the monthly charts. So monthly chart of the QQQ. You have the 8 EMA crossing under the 21 EMA. That hasn't happened since 2008. Also, for the first time since 2008, the histogram on the squeeze for your monthly chart has gone negative. So you mix that up with some crappy looking weekly charts, some crappy looking daily charts. It all points towards more downside. So, again, pretty straightforward. When we get these bounces, I think you're looking for a move into resistance. You're looking to short that bad boy. So the overall game plan is short the bounces until proven wrong. And until proven wrong, I think at a minimum, we are headed back down towards the lows. So the overall game plan is short the sucker. As far as the upside, guys, let me load up the good stuff here. There we go. So as far as like the upside, now looking at something like the QQQ, at least for me in my game plan, it's pretty obvious. I wouldn't want to get long the Qs. We're under the 21, we're under the 50, and then on the big 3 indicator, we have 1 hour, 30 minute, 15 minute, 5 minute red labels. Red means bearish, so as far as a couple of spots that might, right, be really patient. But a few spots that might offer opportunity to the upside, let's focus on energy this morning. Decent looking daily chart, coming off of a pretty good flush, but overall, this holds up pretty good. So in terms of getting long energy, and why don't we focus on Oxy? Oxy's probably been the strongest name in the group. So here's the thing, as far as nailing that entry, right, and the whole goal, if I'm going to get long Oxy, on top of that daily 21 EMA, we're looking for a big-ass rip to the upside. So the daily chart is pretty straightforward. If you have a squeeze, that's a bonus point. But really what we're looking for in a nutshell are these big explosive moves off of that daily 21 EMA. So the major thing here, guys, and here's the thing, if you have the big 3 indicator, you don't actually have to do all this work. You don't have to go check your hourly chart, you don't have to go check your 13-minute chart. For those of you with the indicator, you know what the trade looks like. You find your, ideally a daily squeeze, but you find something above that 21 EMA on the daily chart. And then if you have the 5-minute, 15-minute, 30-minute, 1 hour, buy signals, you get a couple of the green labels here. The green labels tell you trend, structure, momentum under the surface is bullish. Right? So for those of you in the Mastery, let me get the spreadsheet here. So far these are all bullish trades. The trades that we've done since we launched the indicator. Of course, with the exception of the short that we put on the S&Ps on Friday. But for all these bullish trades, it was the same exact thing. Trading above the daily 21 EMA, and then on the big 3 indicator, the lower time frames were green. Trend, structure, momentum, all good and bullish. So, when I look at Oxy here, right, good pullback, pretty good support. We actually have a buy signal here on the daily chart. So do I want to blindly jump in here and buy calls? And the answer is no. If we're going to get that explosive push off that 21 EMA, so Oxy's cranking back towards 75, 77, the key here, guys, is that your lower time frames are fully aligned for that kind of move. So why don't we focus on, say, the hourly chart? And if you got the big 3 indicator, you already know the hourly chart it's not quite lining up to our standards because the label is yellow. If it met the bullish criteria, it would be green. But even for those of you without the indicator, if we just study what the hourly chart looks like during that explosive move, because that's what that's what we're looking for, right? Let's get long at the 21, and 2, maybe 3 days later, we're taking our profits on that push towards +2. Right, so that's what we're looking for. So what you want to do is take it down to say, the hourly chart. What does the hourly chart look like during that explosive push? And like I said, with the big 3 indicator, pretty straightforward. If you have the green label or the green arrows, everything's cranking. Right? That hourly chart, fully aligned for a move to the upside. If you don't have the indicator, let's just focus on a few basics here. So that's what we're looking for. We want to buy those calls. We want to sell a put credit spread. We want to buy a debit spread. But we're trying to get long. And a couple of days later, we're trying to cash out. So for a few basics here, notice how your hourly chart has trending properties, meaning we're above the 21 EMA. The 21 EMA itself is pointing to the upside. And then you could even throw the 50 SMA into the equation. The orange moving average, we're trending above both moving averages, with both moving averages pointing towards the upside. So ideally, you want a similar structure on your 4-hour, 2-hour, 1-hour, 30-minute, 15-minute, all the way down to the 5-minute chart on top of that 21 EMA. Right? That daily chart is basically like your volcano. But as far as trying to gauge whether or not that volcano is going to erupt, that really comes down to the quality of your lower time frames. Right? So for comparison, very much like back here, Oxy's hanging out at that 21 EMA. And you could even argue it's even a little bit better this time around because we actually have the daily buy signal. But the thing to compare here is that lower time frame. So with a focus on the hourly chart, we can see pretty quickly things aren't necessarily aligned like they were back here. Back here, you're above the 50, you're above the 21, you're trending to the upside. Now we're under the 21, we're under the 50, and both of those moving averages, they start to curl towards the downside. So the point being, guys, yeah, the daily chart looks pretty solid, but it really comes down to the structure of those lower time frames to trigger that move off the daily chart. So here's my advice. If you're looking at energy, you're looking at Oxy, if you're thinking about taking a couple of bullish trades here in this group, I would wait for the hourly charts to improve. Like, at the very least, wait for that. Price action above not only the daily 21 EMA, but then I think ideally, at a minimum, also above the hourly 21. So UNG, natural gas here, another good example. So we had some calls in the mastery last week in UNG. We took them off on Friday. All right, and here's why. If we're buying calls on top of that 21 EMA, that's the exact move we're looking for. Big explosive push off of that 21. So if you go and look at the hourly chart back here, there's your green label, or your green arrows rather. So the big 3 indicator is bullish. That already tells me trend structure momentum. It's all perfect here. Right? Now there's a really good probability we're going to get that explosive push. Now compare the hourly chart. It's the total opposite. Squeeze fires to the downside. You're under the 50 and you're under the 21. That doesn't necessarily mean UNG is going to fall apart. It just means the probabilities of an explosive move like that, they generally start to decrease when you lose that bullish trend in structure on your lower time frames. So say you're looking for some UNG calls this week. Guys, I wouldn't do that until we're above both the daily and the hourly 21 EMA. So a shorter video this morning, but hopefully you find that helpful. We got to remember we're not back, we're not in a market like we were back in 2020, where pretty much you wake up, you buy some calls, and you're in pretty good shape. The overall market is bearish, which means for, a vast majority of the market, the path of least resistance is to the downside, which means if we're going to be getting bullish anywhere, I think we got to be really picky and we want to be really precise with our entries. So I wouldn't cling to just a good-looking daily chart. I would make sure that inside of your clean-looking daily chart, your 2-hour, your 1-hour, your 30-minute, your 15, they're fully aligned for a push to the upside as well. And I think at a basic level, a lot of that starts with price action above the lower time frame 21 EMAs. So I hope you guys found this helpful. For those of you in the mastery, as always, I'll be live for a good hour or so on Thursday and Friday. And for the rest of you, wish you all the best of luck this week. Hope you found this helpful. And if you haven't already, go on ahead and subscribe, and I'll see you soon.